Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Bill Duryea here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Tuesday, September 24th, 2013. Last week, we witnessed the S&P break out above a prior three-day high and auction up to retest the prior multi-year high at 1705. The market was preparing for the most recent release of the FOMC forward guidance with regards to its monetary policy and its unconventional approach referred to as quantitative easing. On September 18th, the Fed announced that it would maintain its unconventional, extraordinary, accommodative monetary policy until further data indicated that the U.S. economy was showing enough improvement to justify the Fed reducing its monthly bond purchasing program. Following the release of the FOMC forward guidance, the broad benchmark S&P 500 index broke out above its prior multi-year high and rallied up to a new multi-year high at 1727. Following the rally to the multi-year high, the market sentiment shifted as several Federal Reserve regional presidents indicated that the Fed may revisit the reduction in its bond purchasing program as soon as October. Following the shift in market sentiment, S&P futures sold off from its multi-year high, auctioned down below the starting point of the rally, and today pulled back to retest prior support at or near 1688. During today's pullback to the prior low made on September 17th, the pullback elicited a buy reaction and the S&P auctioned above the prior day's resistance level, and the S&P traded up off the low, auctioning above the prior late in the day resistance level at 1698, and traded up at or near the prior opening range high at 1701. After auctioning up at or near the prior day's high, late in the day, the price path changed direction and the S&P sold down through the trading range and pulled back again at or near today's low. For a detailed look at today's market development, we'll focus our analysis on the 5-tick range chart. At the bottom of the chart, you'll see we've indicated the prior week support at or near 1688, as well as Friday's low and Monday's opening range high up at 1701. During Tuesday's overnight session, S&P futures held support at or near the prior day's low, pulling back to the lower edge of the polynomial regression channel. Prior to today's open, the S&P traded back at or near the late in the day high up at 1696, 1697. During the rally up to the prior day's high, the computerized trading programs ceased to execute on the buy side. Our order flow monitor algorithms detected buy programs waning, and the S&P sold off from the opening range high and traded down below the overnight low and pulled back to retest the prior week's low at 1688, 1687. During the pullback, the high-frequency computerized programs that dominate U.S. markets ceased executing to the sell side. Our order flow monitor detected sell programs waning. The Gaussian digital filters that we use to monitor the micro market developments turned up, and price auctioned exponentially up through the trading range, pausing briefly at the upper band of the polynomial regression channel. After pausing at the high for the better part of an hour, the computerized programs executed an initiated buy order, and the S&P auctioned back up again to Friday's low, Monday's opening range high. As price auctioned up to 1701, our order flow algorithm detected that the computerized algorithms ceased executing to the buy side, following which high-frequency selling was present in the order flow. S&P futures pulled back off the high, paused at the minor stopping point, but then sold down exponentially through the trading range, pulling back at or near Tuesday's low. There was a minor buy reaction into the close, and the S&P auctioned up modestly, ending the session at 1692. Coming into Wednesday's session, the sell-off from the multi-year high has temporarily paused at the prior week's low. The market is no longer in sell mode and is currently in a state of consolidation or equilibrium. The rally back at or near Monday's high confirms that there is buying interest at the current low. When a market makes a major decline from a newly made multi-year high, it typically takes some time for the market to establish a new base of support. Currently, support is located at the prior week's low at 1688. Resistance is located up at or near 1701, 1702. This trading range from 1688 to 1702 represents the consolidation range. The next resistance level above today's high is located up at 1707. The more substantive resistance level is located at 1712, 1713, as this portion of the developing trading range represents the upper supply cluster. That concludes our daily market recap for this Tuesday. If you would like to follow our real-time market commentary, we invite you to join us online at www.followthebots.com. Log on and join us some morning at the open.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.